Good morning, everyone. Welcome to Pre-Market News and Views by Money Stocks. Today is February 5th, 2014. Thank you all for tuning in. Let's jump right into the charts here. We're going to start off with the usual S&P 500 E-mini futures. What you'll see is that the futures are trading lower by about 5.5 points at the moment to roughly right around the 1738 level. So again, you could see the market overnight around 3 o'clock in the morning started to roll over a bit. And right now we're trading right around that 1738.50, 1738 and a quarter level on the S&P 500 E-mini futures. Now, the most important chart, as I've been saying for months, if not over a year now, has been the dollar-yen chart. Now, I want you to just take a look at the dollar-yen today, and you're going to see it looks almost exactly like the S&P 500. So here, dollar-yen is getting a little bit of a bid. So you see the futures ticking up a little bit, but roughly this started to roll over. Probably around midnight, even a little bit earlier than that. And as this goes down, so goes down the market. And that's pretty much the way the market, what the market follows. So dollar yen, if the US dollar versus the Japanese yen starts to go lower, expect lower prices. If this starts to rally and catch a bid and go higher, expect the S&P 500 E-mini futures to rally and go higher. That's just the way it is. This is the trade that the market is looking at. One day, that trade will not, coincidence or that correlation will no longer work, but right now it's working, so you may as well take advantage of it. You may as well use it. All right, let's take a look at a few things out here. Last night you did have a bounce in Japan. I believe the Nikkei 225 index finished higher by about 1.2%. Europe is basically a little bit on the flat side today. I'm not going to make much out of it. Again, all markets are following the U.S. markets. Really, that's what it comes down to. At 8:15 this morning, which is about 30 minutes ago, we had the ADP job report for the month of January. It looks like 175,000 private sector jobs were added. Everybody's going to be looking forward to the government non-farm payroll report this coming Friday. That's really going to be the big news. We're not going to really worry about too much about the ADP because the market really just kind of will shrug that off, and they're really just going to wait for the government non-farm payroll report on Friday from the U.S. Labor Department. But either way, prepare for volatility and watch that dollar-yen chart. It'll tell you everything you need to know. Let's go over some stocks in the news today. We're going to start off with Twitter. TWTR is the ticker symbol. Whoops. TWTR. And what you'll see here for Twitter is that they reported their first earnings report since becoming a public company. Stock closed at $66.32 yesterday. It's trading at $66.49. There's nothing to do here. There's no play one way or the other. It's very choppy and sloppy. There's no real conviction. I ultimately think Twitter's going down, going lower. We'll look at it at lower prices. If it got down to $52, $51.75, that's where I would look for a bounce. I know that's a long way down from here, but that's the only level I even see for Twitter at the moment. It is a new issue. It is a little bit tougher to read. Next, I want to take a look at Merck. MRK is the ticker symbol. You know, the drug company. Right now, Merck is trading at $54.33. It closed at $53.51, so it's upticking. The stock shows me that it does have potential upside. I don't really see anything wrong on the charts here. How high can it go? I wouldn't really expect much more than 55.60, 55.75, somewhere in that vicinity. You can see it already traded 55.50 in the pre-market. So that around that area would be its its intraday top. But either way, the stock is okay. Nothing wrong with it. If it does fall sharply, watch $49.50. That could be a place where you could look for a scalp bounce. Remember, a scalp is nothing more than a quick day trade. Let's take a look at Time Warner, TWX. I know they had earnings. I'm not sure of the exact news. Stock looks like it's trading pretty much where it closed. 62.87 is where it is now. It traded at finished, I should say, at 62.40 yesterday. So there's not much we can make of Time Warner. I don't see anything to do here, to be honest. If it gets down to 59.50, that's where you could play this thing for a bounce. Okay, so keep that on the radar. Time Warner 59.50. That's a spot where you could look for a bounce. Other than that, there's no real play on in the equity as far as I could see. 59.50 though should give you some kind of a scalp bounce. Let's take a look at 3M. I think they increased their share buyback. Stock is trading at 127.40. I don't really see anything to do here, so I wouldn't touch it. even though they're doing a share buyback, or they increased their share buyback, has nothing to do here. Leave 3M alone. Let's take a look at Gilead. Gilead, I believe, reported earnings. Stock's trading at 81.89. It's been a major winner. Biotech has been very, very strong. I wouldn't touch this with a 10-foot pole. It may go up a little bit more. It may not. You could look at scalp bounce at around $73.40, $73.35. Right in there. That would be your gap. That would be your scalp bounce from what I could see. But there is no play today on Gilead up here at these levels. Stock is over bloated. Let's take a look at Buffalo Wild Wings. BWLD is the ticker symbol. Right now the stock is trading at 143 and a quarter. It closed at 140.75. I'm going to give it a slight bit of upside today, upside bias, because the pattern is good on the bigger time frames. Stock is showing potential resistance at around 147.10, 147.08, somewhere in that vicinity. But it's a thin equity. Usually trades under 1 million shares a day, so it can overshoot. But leave Buffalo Wild Wings alone. But it's hanging in there today. It's holding up pretty well. Let's take a look at Aflac. AFL is the ticker symbol. Right now, the stock looks like it's trading at $60, but there's no volume here, so we can't really go off that print. 57.55. If it gets down there, that's where you could take a stab at Aflac. 57.55. That would be a scalp play. Don't do anything until then. So see if the stock gets down there. $57.55. That's where you could look for it. I have a bunch of gap plays this morning, stocks that I'm not even mentioning. They'll be posted up in the chat room at 9 o'clock, which is it's 8:52, so it's going to be about 8 minutes from now. The gap plays will be posted up in the chat room. Let's talk about oil real quick, and then we'll go into gold. Oil this morning is trading up by 81 cents, so it's a good pop on light sweet crude. Let's take a look at the USO, which is a good proxy for trading light sweet crude, and this is all the way up to 35. I have upside to around 35.75, 35.80. I don't know if it'll get there today. I wouldn't expect that to happen, but with all these storms going on in the Northeast and all around the U.S., snowstorms and such, I would not be getting in front of a short on oil. Oil can go a little bit higher. Looking at gold this morning, gold is trading higher by $15.60. Why is that happening? Why is gold up? Real simple. Dollar yen. Dollar yen sells off, gold goes up. That's just the way it works. Okay? So again, gold is trading inverse to the dollar yen, and the market is trading in lockstep with the dollar yen. That's the way it works. So today, let's go to the GLD. You'll see the GLD has started to come in, although it is still up on the session. Closed yesterday at 121. It's trading at 121. But you see how it's rolled over as soon as the dollar yen caught a bid? So look at the dollar yen, up 1, 2, 3 bars. Look at the GLD. Down 1, 2, 3 bars, and now it's flipping back up. So again, watch volatile action, but again, gold is trading inversely to the US dollar versus Japanese yen chart, and that's most important correlation you could make. All right, so in my opinion, gold needs to consolidate a little bit more, but the chart is fine right now, and it could trade in somewhat of a choppy range all the way up to 122.50, 122.60, back down to around 121. So I think that's the range that gold is in at the moment. Okay, we're going to leave it here, short and sweet. I know I've been going long enough, but we did cover a lot of ground today. I want to wish everybody a great trading day, and we will see you all on the charts.